today, when up, is down. Hello again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and property news with a distinctively Australian flavour. Well, late last week, the ABS released their latest lending indicators to the end of October 2021. And there was much rubbish posted about these numbers with various claims of booming investor loans. But actually, these stats suggest to me a potential easing of new loan momentum, which is also an indicator of easing house prices ahead too, because as you know, if you watch this channel, the rate of change of credit is one of the best proxies for price changes ahead. Anyway, the ABS said that new investor loan commitments rose 1.1% to a near record level in October 21. That's in seasonally adjusted terms. And the ABS said the value of new loan commitments for investors has grown for 12 consecutive months, reaching $9.7 billion in October. That was the highest level since the all-time high in April 2015. Then they went on to say, while the value of investor loan commitments has grown 90% over the past year, the number of investor loans only accounted for 33% of all new loan commitments for housing in October. Increased investor loan commitments was seen across most states and territories. There was ongoing strength in Queensland, up 8.9%, rising to a record high of $2.1 billion. In South Australia, up 15%, New South Wales up 1.3%, Western Australia up 4.4%, and the Northern Territory up 78.7%. Of course, that's a smaller but more volatile series, and Tasmania up 3.3%. But Victoria and the ACT both fell, down 3.8% and 12.4% respectively. Now, the value of new loan commitments for total housing fell by 2.5% in October, again seasonally adjusted, and that was driven by a 4.1% fall in the value of new owner-occupied loan commitments. The value of owner-occupied lending commitments fell for the fifth consecutive month, but is still 15% higher compared to a year ago and 43% higher than pre-COVID levels in February 2020. The fall in owner-occupied loan commitments was driven by an 8.4% fall in New South Wales, while most other states and territories also fell, including Western Australia down 7.4%, Queensland down 3.6%, the ACT down 19%, and South Australia down 4.8%. But Tasmania was up 3.3%, and the Northern Territory was up by 0.1%. Victoria rose 2.6% after a sharp fall in September. The number of new loan commitments for owner-occupier first home buyers fell for the ninth consecutive month, down 3.8% in October, and the number of those commitments was 16% lower compared to October 2020. Falls in the number of owner-occupier first home buyer loan commitments were seen across most states and territories, particularly Western Australia, which fell 13.8%, Queensland fell 6.3%, and New South Wales fell 4.3%. There were small increases in Victoria at 1.9% and Northern Territory of 6%. Owner-occupier first home buyers accounted for around 20% of the number of new loan commitments for housing in October. And the value of new loan commitments for fixed-term personal finance rose 4.7% in October, driven by an 11.6% rise in lending for personal investment. Lending for motor vehicles was also strong, with more than $2 billion of new loans for that purpose. And there was also a spike in external refinancing as households sought out cheaper loan products for existing loans. So standing back, yeah, there was a bit of a rise in investment lending, but overall lending for housing went the other way. And of course, first-time buyers are now being priced out of the market, firstly because the banks are tighter on their lending standards, secondly, government stimulus has been removed, and thirdly, of course, investors are a little bit stronger across the market. But I don't think this is the victory that some were claiming in terms of momentum into the new year. I would say the exact opposite is likely to happen, because as we see interest rates now likely to rise and people concerned about the price of loans ahead, that's going to be another dampening factor, unless, of course, the government comes up with another package. And they could do that, particularly if there was an election, say May. Maybe they will announce something before that to try and cajole prices higher again. We'll see. This is such a manipulated market, of course, and the credit momentum is very much driven by low interest rates, bank policy, but also government policy. But we'll see. Now, if you're buying your home in Sydney's contentious market, you don't need to stand alone. This is the time you need to have Edwin from Ribbon Property Consultants standing alongside you. Buying a property is both challenging and adversarial. The vendor has a professional on their side. Emotions run high, price discovery and price transparency are hard to find, and then there's the wasted time and financial investments that you make. Edwin understands your needs, so why not engage a licensed professional to stand alongside you? With RPC, you know you have experience, knowledge, and master negotiators looking after your best interests. So shoot Ribbon an email at info@ribbonproperty.com.au, and if you use the promo code DFAWTW/Martin, you can get a 10% discount offer. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.